With inflation being at 9.1%, is this the cusp of the Utah real estate market failing? Let's talk about it. My name is Payne Clancy Fairbanks, and welcome to my show. So let's talk about a couple of things today. The first things being the typical income of a Boise homebuyer is 24% higher than before the pandemic. And specifically here in Salt Lake City, homebuyers' growth income increased by 13.8%. The national average was 6.8%, so it's more than double what the national average was for Salt Lake City growth income since pre-pandemic. The average out-of-towner moving to places like Miami in 2021 had 25% more money to spend on home than the average local. This is because they've got these higher incomes from San Francisco, and the homes here in Utah were much cheaper than they were in other states. So they come here and they bring their income and they make it so that the average goes higher much quicker. What you're starting to see with these places where the migration has been so great that it's increased home prices significantly in the last 2 years and also brought in a lot of income is that our inflation is actually higher than the national average. Back in June, Utah's inflation rate was 9.4%, where the national average was only 8.6%. Why this is a concern is that this is probably even following to us now. So the national average may be 9.1%, but the Utah average, you have to assume, would be a little bit higher than that. But migration into both Austin and Salt Lake City has slowed significantly in 2022, largely because of the out-of-town priors have pushed prices up so much and because of inflation. Now, the market for the economy is not necessarily weakening, but we can see that there's definitely a slowdown in the Utah real estate market. Utah's housing market is finally stabilizing. Utah's median home prices have fallen for the first time in 2 years. In May, they were $535,000, and in June, they are only $530,000. This is showing that the market here is starting to stabilize. Sales are also significantly slowing. Wasatch Front counties fell 10% to 7,140 units sold, down from 7,921 units sold 1 year earlier. So this is showing that the prices are decreasing. This is also showing that there's less sales than what we were seeing. This slowdown indicates a stabilization here in the state of Utah, which has been hugely what everybody has been looking for the last couple of years. In the 25 largest growth towns, places like Salt Lake City and Boise, these places are more susceptible to a decrease in real estate values if a recession does occur. Does this mean there's going to be a huge bubble pop and we're going to see price decreases by 30%? Probably not, because with this 13.8% income increase in the state of Utah, it makes it so that those prices are already matched to that slightly. And so the decrease is going to be something to make it so it levels out with the income and the Utah real estate market is stabilizing, but it is expected that it's going to stabilize at a level that's higher than what most Utahns are used to. During the pandemic, 70 to 75% of Utahns were priced out of buying a home, especially with the interest rate increases that we saw in the last year. So a lot of people possibly are expecting a huge price decrease and a huge bubble pop. But Essick, who is a senior research fellow at the University of Utah, said, "We're not immune, but we're also in a tiny bubble." So the expectation is that possibly prices are going to decrease, but it's not going to be to the substantial amount that everybody's expecting. So I hope that you found this information useful. I hope that you understand what I'm trying to get at and understanding what's happening in the Utah real estate market. Other than that, please give a like and subscribe if you found it useful. Hope you're having a great day, and bye-bye now.